What's going on, everyone? Shiraz Ahmed here, and in today's video we're going to be talking about the differences in getting a mortgage in Canada versus getting one in the United States. Now, the overall process is actually pretty similar, but there are some subtle differences and you're going to need to know about them. So stay tuned. Alright, welcome back everyone. So today we're going to be talking all about mortgages. You might be familiar with the process already in one country, but did you know that there are actually some subtle differences between getting a mortgage in Canada versus the United States? So today we'll go over some of the biggest differences according to some of the largest banks that finance properties on both sides of the border. Now let's start at the beginning with the application or the purchase process. The application requirements are mostly the same in Canada and the US. You'll need to provide proof of income, your assets, your liabilities will also be checked, and you'll need to have a certain minimum credit score and or credit history. You'll also likely have to have other documentation like purchase and sale agreements for the property. Now, a down payment will also be required, and this is where actually we find the first major difference. In Canada, if you put less than 20% down, you'll need to fund default insurance on the mortgage through CMHC or a similar insurer. As an absolute minimum, you'll need to put up 5% down. Now, in the United States, 20% down payments are typical on owner-occupied properties. 25%, on the other hand, is for typically a rental property. Now, in the US, there are also pathways that you can take to reduce the amount that you'll need to put as a down payment. Now, if you're eligible, you can actually get a loan through FHA, Federal Housing Administration, with just 3.5% down. However, the absolute best deal is if you're a veteran. You can get a loan through the VA, the Department of Veteran Affairs, with 0% down. Now, the next step is usually determining what type of mortgage that you want, as in what kind of product. And this is where we encounter our next major difference. In the US, the process is pretty straightforward. Select a rate and terms, and they'll stay in place for the entire mortgage amortization, which is usually between 15 and 30 years in the US. In Canada, it works a little bit differently. Mortgages with less than 20% down can only have a maximum amortization period of 25 years. More than 20% down payments, you can actually push this amortization schedule out to 30 years. This mortgage period is actually broken up into terms. You'll choose a mortgage product for that term of the total amortization. The most common type of term chosen is a 5-year fixed rate. This means that the rate of payment will be fixed for the first 5 years of your mortgage. When that term is up, you'll either renew for another period. This is the most common option. No requalification, for example, is needed. You can also refinance. Changing any details of the mortgage, for example, the amount or amortization schedule, will need to be done as a refinance and you'll have to requalify again. Or you can just decide to pay off the rest of the mortgage owing. But this option is, of course, given the balance, is less common. The amount that you can actually prepay in a mortgage is also determined by the type of mortgage product that you choose in the first place. In the US, you can actually pay off mortgages early with no penalties. Now in Canada, not so much, especially if you're on a fixed term. Closing costs and processing times is another area where the two countries are actually quite different. This is one area where Canada is literally the clear winner. Processing time to get a mortgage approved in Canada, according to a major bank such as RBC, is between 5 and 10 days. But we've actually seen sometimes this can happen, if accelerated, in a single day. Now in the US, you're looking at a 40 to 45 day mortgage process. Now on the RBC public website, they'll actually contain 10 steps that you must take in order to complete this process over 45 days or so. Closing costs are another major expense, sometimes forgotten about. In both countries, the closing costs can vary quite a bit, especially depending on what area you're in. That being said, generally the costs are cheaper in Canada, an average of an estimate of about 2.5% of the purchase price for closing costs. In the US, this is on the low end of the estimates and it can go actually much higher. Now, the last major difference is that mortgages are actually one that seem to come up the most. The last major difference in mortgages is actually the one that seems to come up the most. It's the tax treatment of the property, specifically in your ability to write off the interest. Now let's talk about Canada first. In Canada, a property is either your primary residence or it's not. If it's designated as your primary residence, you cannot deduct the interest expense on your mortgage. However, if you were to borrow money on a mortgage on an investment property that you rent out, you can actually deduct the interest cost there. Now, the main differentiating factor is whether or not you are borrowing to invest. In the United States, anyone can deduct their mortgage interest costs. But whether you actually end up deducting your interest depends on your ability to claim itemized deductions in excess of a standard deduction. Now, according to the Motley Fool, only about 30% of American taxpayers actually claim this deduction anyways. Another outcome of this difference is that Canadians have less incentive to over-mortgage their homes, which was a major contributing factor to the 2008 financial crisis. Well, thank you for sticking around to the end. I hope you appreciate this quick breakdown of the differences in mortgages on both sides of the border. If you subscribe to our channel, you'll get more information about need-to-know items just like this. If you also appreciate the content that I'm creating, please consider hitting that like button as well. It really does help out the algorithm and the channel. If there are any individual topics that you'd like me to cover, or you even have questions about your own personal circumstance, I'll make sure I put my contact info at the end of this video. Please feel free to reach out to me directly as well. Until next time, please stay safe out there, you guys, and take care. Bye for now.